Hello and welcome to Project Trade. This is the trading highlights show, all of the peak moments from our testing of trading strategies. Today we're starting a combo strategy. It's split down the middle, half on the technical indicator side of things and half on the price structure side. A dynamic duo at the intersection of greatness. And it's a reversal chasing strategy. When price runs out of momentum and can't go no more, we'll be looking to pounce on that weakness and ride the return in price. Let's start with the technical side of things. Our indicator will be the stochastic oscillator. There's usually two lines to the stochastic oscillator, the percentage K line and the percentage D line. We're going to be using just the percentage K line, and we'll be using it with the default 14 period input for the look back frame and with a slowing input of 3. Here's what the percentage K line of the stochastic oscillator looks like on a price chart. It's a range bound oscillator which tries to figure out when momentum has exhausted itself and the price could therefore be considered overbought or oversold. The fixed range is between the values of 0 and 100, so 0 is as oversold as possible according to the indicator and 100 is as overbought as possible. The default levels of the stochastic oscillator for determining an overbought oversold reading are usually 80 and 20, but those are a little light for us. So as in our example here, we're taking our levels all the way to 95 or above for being considered overbought and 5 or below for being considered oversold. If you want more on the indicator, our video is linked in the description, but for now we're going to get over to the price structure side of things. It's support and resistance, classic support and resistance levels, nothing dynamic about it, no Fibonacci numbers, no wedges, just a good old vintage edition. For the uninitiated, support and resistance are areas of price where there is a greater likelihood of seeing a reversal in price because price has reversed in that area before. A prime example of a support level here, support is when price comes down and bounces up off of that level. Near perfect as we see multiple regions where price has hit that support zone only to swiftly reverse away from it. It does finally break through over on the right, but 3 consecutive knocks like that would make you want to think about your next move if price found its way to that area again. Here's a resistance example, just the opposite of support. For resistance, price runs up and bounces off of the price area to come back down in a fashion of reversal. This return in the middle shows that you're not always going to get a perfect closing for support and resistance. They should very much be considered as zones with a bit of leeway given to the exact pricing. We have also done a video getting further into support and resistance, also linked in the description, but if you are going to watch that video, we will not be waiting for you here. We are going to move on to what our actual entry criteria is going to be from these tools that we're using. We'll start with the stochastic oscillator, and it'll be a signal for us to sell if the stochastic oscillator moves below 95 or above 5. Notice that is moving below 95 and above 5, so we're waiting for the reading to be coming out of the overbought or oversold territory before we think about jumping in. If you enter into a trade on the default settings when the indicator moves into the territory, you could easily be walking into the middle of a trend, maybe even the beginnings of the trend. It is certainly not uncommon for the stochastic reading to remain in the overbought oversold region for extended periods of extended time. Here's what those signals look like on a real life indicator example though. A couple sell signals we see when the stochastic comes out of overbought territory, and a buy signal there as it emerges from the cocoon of the oversold territory. Alright, makes sense. Once we've got one of those stochastic signals, we are not going to enter into the trade just yet. We're going to check whether price is at a support or resistance level where it has previously reversed. Since we are trying to create a firm system in the strategy, it will need to have rules for our support and resistance levels that we can always turn to for a consistent answer for determining their existence. First, what we'll do is mark out 2 flat horizontal lines onto our chart. One will be at the high of the price for the current candle, and one will be at the lower price for the current candle. That is the candle that the stochastic gives us a signal. The space between those 2 lines, that will be dubbed our channel. Here's an example of what that channel would look like. Fortunately, the high to low in price of the latest candle was clear to see, so the channel was easy to create. This should always be the case for the visually paired. Once we've got our channel laid out, we will then be checking back at the historical price data over the last year, and we'll be looking for any closes on the daily time frame which are inside the channel. Support and resistance can of course go back further than 1 year, but as a general rule, the more recent the level, the stronger it is, so we won't go crazy far back. We'll just be looking at the previous year from the date of the entry signal. So we see in this example here, we've got a few overbought and oversold options, but we are looking specifically at this overbought candle in yellow. You can see where the stochastic comes out of the overbought territory, so we mark out our channel from the high to low of that candle, and we see a whole group of closes right here that are inside the channel. It is often going to end up as a cluster of them rather than just a single candle, but then when we find the close or closes, we need to determine whether the next candle that finishes outside of the channel does so as a reversal of price, meaning that it's going in the direction of the signal given to us by the stochastic oscillator, or whether it's broken above that level, negating our stochastic signal entirely. If it's in our favor, then we'll enter into our trade. Let's return to our example from just before, and we have our channel marked out again, and the first close outside of the channel during that cluster of candle closes is this one right here, which does finish beneath the channel, matching up the sell signal from our overbought stochastic oscillator. In this instance, after we enter that sell trade, price moves sideways almost exclusively within the channel, so outcome unknown with this one. One more example though, it's a buy signal this time. The stochastic comes out of the oversold region at the close of this candle, so then we can make our channel, which as we know goes straight across from the high and low of our yellow candle, and we see a close here which was inside the channel, so we look to see where the next close was, which is on the next candle over here. It's above the channel, which is what we want for confirmation on a buy trade. It wasn't a false move that time either. Price did go on a bit of a run up, and it does for us as well. We catch the reversal and take profits, hopefully right at the top of that huge green candle. Always, we cannot rely on a reversal in price going on ad infinitum though, and we can't trust that it's always going to turn out to be a reversal at all. That does mean that we better manage our money with a stop loss and a take profit. First off, we'll need to measure out the pip distance of the channel for the trade that we're entering. Again, that's the high to low price range from the latest candle, and that will be called risk X. If you'd prefer an average of the high to low range from a look back frame instead of using the latest candle range, go ahead and use the average true range indicator as your reading and call that your risk X. The volume of our trade, the size of it that is, that will be calculated by taking risk X and allocating 1% of our capital for that distance. Our stop loss for every trade we enter will be at 1x risk, meaning that we'll never lose more than 1% of our money on a trade, even if it beelines for the stop loss as fast as it can as soon as we enter. Want to avoid losing too much on those. When it comes to taking profit though, we will have two different rules depending on the strength of the support or resistance level. If the price has only bounced out of the channel in our favor once on the daily chart in the last year, then we will keep our trade at a 1-to-1 risk reward ratio, so the take profit level will be set at 1x risk. But if the price has bounced from the channel any more than just the one time in our direction, we will double down on our entry and push it to a take profit level at 2x risk. That's regardless of whether it's bounced out 2 times or 2,200,000 times. 2x risk is the number. Let's check out an example using our chart from before where we got ourselves into a buy trade. Our entry candle again in yellow, and with our channel we can see that distance from high to low is 1x risk to us. That's a measure of 1% of our capital. We're not entering at the high of our candle though, we are entering at the close of the candle. So just above the yellow line is our entry price. We'll move the channel up and show it from our entry price so it's clear to see where we would take profit if the channel had bounced just the one time in the last year. So we took a 1% capital reward at the 1x take profit level, and let's assume that it had bounced a second time, so we used a 2x take profit level. We can shift the channel up again and show in that big green candle is where we'd get the profits. Not at the tippy top, so a trailer might have helped on that one, but still pretty promising that we got some of it with twice the reward than the risk. We'll also close the trade if the stochastic oscillator reading goes all the way to the opposite overbought oversold region from our trade. That means if we're in a buy trade because the stochastic oscillator reading came out of the oversold region, we will manually close the trade down if the stochastic reading is going above 95 in the overbought territory. In theory at that stage the stochastic is telling us another reversal could be due, so best to get out of the way and take what we've got. Then flip that for it if we're in a sell trade, or shut it down if the stochastic value moves into and closes in the oversold region at a reading of 5 or below. Nice moves, that's our money managed. And as we've said, it's going to be on the daily time frame we measure all this. We're on the daily time frame with the aim of getting some stronger support and resistance levels than we might get on say the 1 minute chart, and we'll be reaching across all of the 28 major and minor forex currency pairs. We'll check in on all of them once a day right at the end of the day as the candle is about to close. Looking at a single currency power asset may mean that we don't get an entry signal for years, so let's increase our chance of some trades. If we get multiple signals from different currency pairs but where one currency is the same in those pairs, for example if we got the euro US dollar and the euro Japanese yen signals on the same day, we will take both those signals but we'll half off the amount of risk. So then our risk X will be a 0.5% capital risk for each of those trades where we get 2 signals, or 0.33% for 3 trades, etc, etc. A journal will be typed into which will contain the information of the trades for our understanding, learning and gauging of a true assessment of the strategy. Let's not live in an imaginary world where we half test and pretend that every trade we take is its best possible version. Well, that's the strategy laid out in full. Let's get into the platform and trade some. Okay, so here we are with the euro US dollar pair pulled up, just simply because it's the biggest volume pair, the one that we all know. your friendly neighborhood currency pair. It's on the 1-day time frame. Each of these candles are representing 24 hours in time, and at stochastic oscillator, just the percentage K line. And all we're looking for is the first period of the stochastic either coming out of the oversold territory or the overbought territory. Neither of those are the case for this currency pair. Stochastic, well, it's a bit above the halfway line at 69.27 is the reading, but certainly it hasn't been in oversold territory for a bit. So that's all we need to do. We're just going to look through the other 27 currency pairs that we're trading on and just pull up the stochastic oscillator on the daily time frame, see if we've got a signal. I won't update you on every currency pair, probably get a bit tedious, but if there's any of interest, we will drop by them. Great British Pound US dollar, we missed it by a day. Yesterday it came out of the oversold territory. Would have been able to take a look at that one, but not today. Aussie dollar, New Zealand dollar, it's been overbought for a good few days now. We are waiting to pounce on that one. Let's get it out of that territory, and maybe we'll get a sell trade. New Zealand dollar CAD only missed that one by a couple of days as well. Good to know these signals do come along, but nothing too much interest on the charts tonight, and certainly no entries for us. That is absolutely fine. All we'll do is come back in around about 24 hours time and check again then. We are back for day 2. We've got our stochastic oscillator pulled up again, K line, and we're just going to do the same again and look through our 28 charts, see if we got any signals. New Zealand dollar, US dollar could be heading back to the oversold territory. Just needs a couple more red days for it. Australian dollar, Canadian dollar pair, that's very close to being in the overbought territory. It's been creeping up. There's been some pretty strong green days. One more, especially like one of these, and that'll be comfortably in the overbought. Pound Swissy hovering near the oversold region. Sharp red day like that will push it in. Here we go, the Australian dollar, New Zealand dollar pair. We saw it yesterday in the overbought territory. Now it is just about creeping out of there. Very narrow, but that's a signal, 94.67. Good stuff. Now let's just check the other charts before we go any further with this one. See if there's any more stochastic signals out there. No other entry signals, so we are all good to push on with this Aussie dollar, New Zealand dollar trade. So we are going to make our channel. That's the high of today's price and the low of today's price. Our channel is now in place. So now let's go back in time 1 year and mark that out on our chart. 14th of December 2020. We've marked that here, so we're just looking forward from there, and we're looking at closes inside the channel. I gotta say, this narrowly missed out. It's in the direction of a buy trade anyway, but still that is very close, so maybe there is something to this level, but then you could call that one a level as well. Let's move up, and then we had nothing for a long time, and then we were back there again towards the end of July, start of August time. Whole cluster of closes in the channel there, but it wasn't an up in and reverse back out. It smashed on through, so that one's not viable to us, and then it faded off until around about October time, mid-October. Got another close inside of there, but it didn't retreat out. Well, it did retreat out, but not at first. It went higher than the channel is, so we can't trust this one just yet. Say for example this candle had closed in there, and instead of these candles it stayed within inside the channel and then came back out. That would be viable to us, but not quite there yet. It's not an entry signal for us. What could get us in is seeing a couple green candles, getting back into the overbought territory and having our channel here. Say for example, let's move this line up here. If that was our channel, then that would be an entry because we've got the close up here and then it's bouncing back out in our favor. So still potential in the next few days to see some more green before a full reversal. Today it could be just like that day was. 3 days prior, just had a small retracement and then cracked on. That's what we're after, so maybe it'll come, but not tonight. Nothing more for us to do except for returning tomorrow and checking the charts again then. Day 3, let's see if we've got any signals out there. US dollar CAD doesn't quite get into that overbought territory. It did pull back from the highs. It's going to struggle if we see a retracement here. Australian dollar, Canadian dollar, that absolutely storms into the overbought territory though. First period inside the overbought territory and it scores a perfect 100. This has really been on the up and up. As soon as it comes out of that territory, we'll be checking it for a resistance level. No new stochastic signals for us tonight though. We will remain ever vigilant and come back tomorrow to check again. Day 4, same story again. Let's find out if we got any signals. Aussie dollar, US dollar almost into overbought territory. Australian dollar, Canadian dollar almost coming out of overbought territory. Stochastics hovering around 95, currently at 95.76. If it could just get below that line beneath 95, then we'd be able to check for resistance levels. Not quite there yet, maybe tomorrow. Aussie dollar, New Zealand dollar almost there as well. Showing a reading at 95.24 in the stochastic. Ever so close, but I think we still need it to pump up more. This one we looked at the other day, see if we had a signal on it. We'd really need a high above this level right here. So we need a green day and then a red day to bring it back out. Still no stochastic signals for us on our 28 currency pairs, so we'll check them all again tomorrow. Day number 5. Let's find out if we got any signals to finish our week with. Even after a red day, it is still almost in the overbought territory for the Aussie US dollar. Here we go, Australian dollar, Canadian dollar, that is coming out of the overbought territory. It's been strong for the Australian dollar recently. You can see our last period at 95.5 on the stochastic oscillator. This period currently at 93.15. Before we jump in, let's just check those other charts. Euro pound taking a nosedive towards the oversold territory. Could see that happening. Still overbought on the Australian dollar, New Zealand dollar. Need it to come out of there, but need that bigger push first. Your Australian dollar, that is just about creeping into the oversold region. No other stochastic signals, so we can go ahead and set up our channel. There we go. Now let's head back a year, back to December 17th over here. And wasn't in the channel for a long time, but certainly has been lately. Let's zoom on these instances. And we can see even though there is a level here, particularly there, close inside, bounces back out. For the purposes of our strategy, it is only operating as a support level in this channel, because when price comes into it, it does bounce out, but it bounces to the upside. Each time it comes down into it, and then back out it goes. So an entry signal on this now would be if price continued up, then came back down, and then became oversold. It's gone in that direction a few times. Or price could bounce back down. We'd miss it this time, but maybe if it came back up again, became overbought once more, well, potentially get it the second time around. No signals for us this week, no entries, so nothing to check out in our trading journal. But we'll be back in 72 hours once again, looking for that first entry.